Almost all of that trading volume results in money moving from the pocket of one investor to another. The company that issued the stock doesn't raise any new funds at all. The primary market is different. If Ford or Nissan wants to raise money, then it can have a seasoned equity offering, or an SEO. In an SEO, a company sells new shares, and that increases the number of shares already held by investors. In that case, Ford does get the proceeds of the sale of the new shares. Lots of people don't like to buy new shares directly from a company. The CEO of a company knows more about his company than just about anybody else. And if he decides that his company should sell shares, then they don't want to be buying. The CEO might be selling the shares because he knows they'll sell for more than they're worth, and he knows better than anyone else. After all, he's the guy that makes the key decisions that help determine how much the company is worth. Some of you may remember a Dilbert cartoon drawn by Scott Adams. The clueless boss says, "Our CEO says we are poised for huge growth in earnings." In the next panel, he goes on to say, in an unrelated move, he announced that he will leave the company before any of his stock options vest. That sets up the punchline. While Dilbert and his office mate Wally recoil in shock, the naive boss says, "The poor guy will miss all of our growth." I'm with Dilbert and Wally on this one. If the chief executive officer is bailing out, then I'm heading for the exits too. I don't care how much time you spend studying a company, you're not going to beat corporate insiders in the trading game. Of course, trading on insider information is illegal. A notorious example is Paul Moser, whom the Securities and Exchange Commission fined $1.1 million for his role in a Salomon Brothers bond trading scandal in 1994. Just a few days before the bad news about the scandal broke, Moser, then the head of the government bond trading desk at Salomon, sold 46,000 shares of Salomon for about $36 per share. Of course, after the rest of the world learned the bad news that Moser had been caught violating securities regulations, Salomon's stock price fell off a cliff. 2 weeks after Moser sold those shares, Salomon stock traded for less than $24 per share, down $12. If Moser had gotten away with it, then he would have avoided a loss of over $550,000. I'm not going to tell you that stock markets have eliminated trading on insider information. I do think that all of those smart people who spend so much time studying stocks have a good chance of catching it when it does happen, and the penalties for getting caught can be pretty stiff. The result is that most of the time insiders disclose their trades, and this affects the price they get when they do make them. John Cochran of the University of Chicago points out that people like us have more than just the regulatory apparatus to protect us. He says that short sellers, people who are willing to bet that the stock price is too high, uncover far more financial fraud than the Securities and Exchange Commission. They often see the fraud before the authorities, and if they do, then they sell the stock in anticipation of a big price decline. That probably happens with insider trading too. The playing field for trading stocks might not be perfectly level, but on major stock exchanges it's pretty close and way better than you'll find on some other exchanges in developing countries. We accept that computers are a fact of life these days. We take them for granted as record keepers and as transaction aids. Almost nobody really worries about this anymore. We've come to accept that machines diagnose problems with our cars, give us directions, and even land our airliners. Computers make stock markets much faster and cheaper to use, too. You can place an order to buy stock directly online using an internet brokerage account, and that computer will talk to the computer of somebody else who wants to sell. Done. That's much cheaper and less prone to error than having people write orders on paper and pass them around. For some people, though, automatic trading mechanisms, making trades without human involvement at that exact moment, does seem to be a little unsettling. Nobody